Good afternoon, everybody. Let me get our folks in here. We got Domain Shane in the house and Andre, of course. What's cracking, fellas?
Not too much. I got a heater that just went out, so I have fun activities tonight.
All right. Yeah, we'll be burning the wood stove tonight. How was the massage, Shane? Are you feeling loosey goosey? You gonna
Yeah,
loose loose lips ruin domain drop lips. That's what they say.
yeah. Well, loose hips makes for better running, so it works both ways.
There we go. Give and take. Man, I had a brilliant idea on the ski slopes yesterday. It was like in every gondola at the ski slope, they should have a masseuse. Like they do it at a casino like poker floor, and the masseuses come around and $10 get a massage on the way up. That would be such a hit. It's amazing that that's not more of a thing.
Yeah, I mean, people underestimate the value of a good massage. Yeah, especially when you're older like me. Like everything tightens up pretty bad. So I don't want to go with like the hot rocks or I don't want to pay $150 for a spa. I want some dude to get his elbows into me and loosen everything up.
Yeah, exactly. I always opt for a guy. I need strong hands, and simultaneously, I cannot handle it. Like, just got so many knots. Not enough massages over the years built up. What's up with
Yeah.
you, Andre? How's life over in Europe?
Hey, can you hear me?
Yep.
Yeah, it's actually a lot better now that I'm eating since we had our last show. I think I told this to you in private. I had my 13th 88-hour fast where I just go water only. And it's been kind of cool, especially since, I know with Josh, it's been kind of different, I think. But for me, it always, some very good mental clarity tends to kick in after the first 48 hours. And so for every fast, I have like a day and a half that is usually where I'm at my most creative over the year. Let's say I do these fasts once every 3 months. And so whenever I have that window, I kind of try to take advantage of it and think about my personal finances, about my business stuff, and so on. And, it's been a good opportunity to think about what I'm going to do wholesale. I am experimenting right now with um, increasing my prices. Like everyone knows, datdomains.com, where my prices are quite low now. But if you visit domaining.com right now, you're going to see one of my other landing pages where I have prices that are about 7 times higher. Like at thatdomains.com, my minimum if you pay through Bitcoin is $14. On the domaining.com lander that you see there, so the sponsored headline, it's $98 if you just buy one domain. And I'm moving inventory this way. I'm still playing around with it. I'm not yet ready to remove my low prices altogether. But yeah, I think it's been a good opportunity to think about what I'm going to be doing for the rest of the year. And especially with the craziness that's going on in the markets right now. And I think it's going to be a good opportunity for us today to kind of discuss that and how it pertains to domains. I think that maybe some of the carryover clarity that I've had from the fast, hopefully it's going to help.
Yeah, that's interesting. You should have like a tag in your portfolio to know which domains you registered while fasting, so you can double back and see what your performance is like versus average. Um, yeah, I haven't done a fast in a while. We talked about it a couple. I think I did one a couple of months ago. Uh, they're
It was a
they're really
long
good
one,
for
I
you
think.
though. Yeah. But yeah, Shane, glad to have you on. It was good to catch up at the ICA, and get to hang out with all you guys. Um, and we've been talking more lately, and just wanted to have you on and be able to pick your brain a little bit. And I've seen you've had quite a bit of activity on X recently. Looks like you went on a buying spree. So maybe that's a good place to start. I mean, what's going on in your domaining world right now, and what has you excited?
Yeah, I mean, I think I'm always excited about domains. I kind of play a different game. I mean, pretty much talk for a living on domains here as far as between being on Sherpa and on the spaces. And I'm pretty much an open book. Everybody knows my dog and my family and my domaining experience. So I'm probably people have heard me too much, but I'm always learning and listening. And Renee, I love talking to Renee, who's in the crowd here, and everybody at ICA. I just love hearing other people's approach to domain investing because we all know there's a million different ways to approach it regarding how much time or finances we have, what kind of portfolio we want to build, what our areas of expertise are, right? We all have some information asymmetry when it comes to what we know and don't know. So I'm always listening and putting in different perspectives into my thought patterns, and so I've just been doing a couple things a little different as far as uh, adding a portfolio that's not as valuable but more quantity. Excuse me, and I did add 100 domains of a certain type that I'll share now that I'm done doing it. But we can talk a little bit more about what I'm doing, and it's really just a gamble. But a lot of our portfolios, probably 10%, are just a gamble, a lottery ticket.
Yeah. Yeah, break it down for us. I mean, whatever you're willing to share, of course.
Yeah, so I've made it very well known that I think one of our biggest problems across the world and nation is energy and electricity, and so I put a large amount of capital of my personal portfolio into that. I went in pretty heavy last year, and the returns were life changing. And then this year, I took a lot of it and doubled down and went into some stocks, and it's changed my life. So it's added seven figures to my income. So I thought,
Is
why
that
not?
is that uranium miners? Is
No,
that
that's Bloom.
Tesla for solar and batteries? Like
Just
what does
pure
that look like?
batteries. So like Bloom Energy, which is on the spot energy, their cells, fuel cells, and then GE Vernova, which is like nuclear and all types of energy, are my two biggest plays. So I've gone into actually people bringing energy not from the grid, but other forms, and not necessarily alternative, not wind and solar, although GEV is into that as well. But the wind part is really hurting. But in general, it's what can these data centers, what can people do that is not just straight grid? Like what kind of energy is that going to be? And we're finding everybody knows we have a shortfall. Obviously, Trump said, "Hey, we need these AI data centers off the grid. We can't have these 20-acre data farms taking away from the Joneses who live down the street. We can't share that energy. So we've got to figure that out." So I'm investing in the companies that I think have figured that out. So where that translates into domains is, um, and Josh came out and said it the other day, which kind of stinks because I've been buying .energy names, which .energy names are $11, depending who offers them, and a renewal rate of $90. So that gives you a 1 year window to see if you can play the numbers. So I've purchased a couple hundred .energy names to see if I can, and price them at $2,400 to see if I can sell more than two, over 200. So if I can do more than 1%, I will be good on this first run. When the renewal time comes, that's going to be a whole different story as far as what happens there. So that was my play, is to add a couple hundred. My portfolio is only 750 domains as it is, but they tend to be higher quality. A lot of 3 letters, 4 letters, 5 letters, one words. I didn't really go into the numbers game, but I'm going to try this .energy. And of course, it killed me when Josh Reason put a .energy cell and then put something like "if you know, you know." And I'm like, oh, I've been working on this for weeks, picking out names and going through it, and I wasn't done yet. And then he came through and forced me to pick up my last 60 or 70 to finish out the portfolio.
Well, sometimes you might need a kick in the ass like that to build up your conviction and actually commit to to a thesis. I remember talking to Renee about this, and he's like, you don't want to just dip your toe in and buy a couple of names for a thesis. It's a power law. You got to place a lot of bets, and you got to have conviction enough to put significant capital behind something because the sell-through rate is just so low that you're not going to know otherwise. Um,
Yeah, I
yeah, well,
agree. My father, since the time I was 5 years old, now the numbers have changed, but even when I was five, he said, if you don't spend $3,000 on it, or if you don't invest in it, then you're not really sure you wanted to do it. That's what he always used to tell me when I was little. Like, I don't know why that number came out, but he's always like, if you're not willing to put 3,000. So when I joined him in business, I was like, we need to spend at least 3,000, or it's not worth doing.
yeah, absolutely right. If you don't want to be someone like picking stocks and just dipping your toe in 20 different ones. One, because the overhead on keeping up to date on all those is just inordinate. And then two, it shows that you're lacking conviction, and so you're not actually you're not going to be able to withstand the drawdowns and be able to add when you should be adding. And so there's a lot of truth to that. So yeah, that's fascinating. I remember hearing like, I mean, we've all heard quite a bit about the pressure that the grid is under. We see, uh, you know, data centers co-locating their energy production. Whether that's gas turbines. I think the backlog on building gas type turbines is 10 years now, and so it's very difficult to add new capacity that way. Um, we see Amazon, Google bringing old decommissioned nuclear reactors back online, um, and really pouring some effort into nuclear. Trump has tried to pressure the Nuclear Regulatory Commission to, eliminate red tape and allow new capacity to come online. But obviously, the lead time there is a decade or more. Um, so we're in a tough spot. But solar is probably the least permissioned of all of these energy sources, um, and is has the green angle. Um, so I'm sure we'll see quite a bit of investment there. It's and we won't have to get into your specifics exactly, but you were contented to only have a couple hundred names there. You didn't feel the need to go any bigger. I guess it is, energy is a very targeted TLD that warrants targeted SLDs, and so there's only going to be a narrow window of acceptable SLDs there.
Yeah, I mean, I pretty much went through my 10,000 keyword brands that I use, and it only came down to like 180 that I could find, and the rest I just kind of picked. But I it's the same. Branding's branding, right? It's not generic keywords. It's more last names, directions, celestial names, Greek names. Like it's branding. So I just went with those, and obviously many of them are taken already, but I just went through some of them, and within a couple days, a lot of them are getting 40 and 50 searches already. And so I know that there's people looking for them. Again, a sale is not a search, but you can kind of get some data there. We'll see. Like I said, it's just a play. We've done this game before, back when .xyz. I didn't go as heavy, but my partner at the time, Josh, when XYZs were 99 cents, he did 10,000 one day to see if he could make money. And after 1 year, I think at the time he had made a little over $20,000 in profits that first year on the 99-cent domains. So when things go on sale, just like the .coms that you guys have, but at the same time, .com, there's pretty slim pickings. You're really at the bottom of the barrel. Where .energy, there were still quite a few names left. And yes, it's a very specific TLD, but energy companies are the ones propping up. All the solar companies call themselves energy companies. Everybody calls themselves energies, whether they're in natural gas, whether they're in propane, whether they're in solar. They're all calling themselves energy. So that's the route I took. I looked through a lot of TLDs to think what was a hotter one, and I thought, why not just keep playing this whole energy game across the board and stick to what I'm looking at every day, all the videos I'm watching. So I just kept it in house, and went that route. But as far as keywords and brands, it's what people they like to call it by their last name. So I went through the popular last names. I picked the popular directions. I didn't go very many states. Um, I just didn't pick that kind of geo, but I did pick, like Southwest, Northwest, East, all those kind of things, went through them. Again, many of them are taken, but there were quite a few available still.
Yeah, I'm trying to think if I've ever seen a dot energy in the wild. Now I'm having Claude do a little look up. Um, but yeah, I mean, it's also tricky because it's not like these are software companies where some guy with a cursor subscription can launch a website overnight, and the demand is just ubiquitous for these kinds of domains. Building an energy company is a serious endeavor, and so you have limited number of potential buyers coming online. But of course, ever more given the direction that we're going, both in the administration and technologically speaking. So.
And they may
Um,
take the dot energy just as a protection name. I mean, they already may have the dot com and just say, "Hey, we want to secure the dot energy," since we've seen that. They may do that as well if it's a company that exists. I don't know all I didn't register the biggest energy companies. I didn't go and take their names, even if they were available. I didn't take like Kanoko or something like that. But a Southwest dot energy, there may be a company that just wants to protect it. So again, you're exactly right. It is a smaller, not anything I would suggest, but $11 a piece. It's not for a couple $1,000s. It's worth it for me to try and learn and practice.
Absolutely. And do you normally, sample, like, dip your toe in for a month or two while you're gaining conviction, and look at the search frequency that you're getting on these kinds of terms before you really commit to a thesis?
I did at the time, but there really wasn't enough data to make me jump in or jump off. After I got the names and looked at the search, I was happy that I had done it, to be honest with you. I was very happy with the amount of searches. I mean, we're talking 1,000 a month on some of these if the numbers keep rolling. So yeah, again, no, I didn't do a tremendous amount of search data other than just the energy companies in general. It's one of those things. I think we're still early. Energy's been around for a decade, but I really think the energy push and thoughts and ideas are are really pushing forward now. Like I think it's just coming into fruition. And again, it's just a hunch. It's one of those gut things. I normally haven't done this with any other TLDs. This isn't the game I play normally, but it's a game I may play if I can get some conviction. And again, I'm willing to put $10,000 in a couple different TLDs and try and own a category. 200 names does not own a category, but 200 names of a category that hasn't been taken that comes on. But it's not at $99. The problem is it's not a long-term conviction. That's not going to play. That's impossible in my book to play $99 times, three or 400 domains. So it's really a 1 year test to see how it goes. Those prices I'm willing to try.
Yeah. Well, luckily AI acceleration is is speeding up faster than ever. So God knows what the world looks like in 3 years. You won't have to think and plan too far out into the future with those renewals. So you expect your renewal rate will be, what, 10% of these?
Yeah, that's exactly right. That's kind of what I'm thinking at 10%. We'll let the numbers play out and see what we look like, see if there's any
Hmm.
sales and go from there. I mean, if we got 5 sales, that would change what I do. I'd probably just roll all that money back into renewing them another year and play with the house's money. But again, we'll play that game as we get to it. And I'm going to look at a couple other TLDs and maybe go into that. I will do some hand registering. You were nice enough for the ICA to give us $500. I'm going to add that and then add some more to it and do a couple hand registers. I'll probably enter the back order. Renee's convinced me to try some back ordering stuff as well. But again, that's kind of a different portfolio that you need to manage. And I have to decide whether I have the time, because that is a lot of time managing it and keeping it up to date. And, it's just a different game. And I don't know if I want to put the time into it. I really like my portfolio the way it is. It's good for, good money every year. I don't have to buy too many domains. And then the domains I buy tend to be all 4 figures and 5 figure domains.
Yeah, I hear you. Well, there's plenty of theses to bet on right now. Um, you might smack your forehead with me yapping about this, but obviously Trump is on a bent of reshoring a lot of critical minerals extraction and processing as well. So we could expect to see a boom in that industry. Obviously, the markets are telling us they like metals as of the past month or so. The Venezuela drama, things are pointing towards reshoring and doing a lot of heavy industry in the U.S. again. And so there's quite a few things to bet on there. Perhaps less perfectly aligned there. There's no dot metals, so betting on it in a domaining context is probably a bit lossier than you would like to be able to put size behind. But yeah, that's a beautiful, aligning of the stars there where we have dot energy and we're able to make bets there.
Yeah, I mean, there's
Um,
always something. Travis and I went on a IQ, rampage for a couple of years where any name that ended in IQ, whether it's 3 letters or 4 letters or a good keyword of IQ, and that served us really well. We sold through 80% of our portfolio, and our big sale was NIQ. I think it was 300 and something thousand a month after a $20,000 purchase. So we did really well with that. But we also had 2 people putting in money. But we put together probably roughly $50,000 worth of money and just went on an IQ buying spree for a period of time.
yeah, wow. And this was what, post ChatGPT? Can you hear me? Oh,
Oh, sorry about that. Yeah, it was right before ChatGPT was coming on to the point where we know it now. So it started about 4 years ago, and really last year we didn't do much with it. I think we might own a couple names still, but not too much now. ChatGPT definitely has changed everything and made it much easier to search for things.
yeah. Well, no, I just meant like, was it a thesis born out of the
No, it
ChatGPT
wasn't.
moment?
AI really was.
You
It
Very
really
prescient
was.
of you. I mean, was that your thesis that AI was going to shake things up?
No, we just IQ is an eternal statement of intelligence.
Yeah.
And so ChatGPT was just actually made it work. That's not our thesis behind it, but IQ definitely meant
Pretty
intelligence.
perfect timing there.
Yeah,
Yeah.
well, I've got a lot of super lucky. Like I was talking, I think, to Renee the other day. Is someone made a big offer on Domain Chain, and I bought it because my Hispanic coworkers used to laugh that I was known as Domain Shane, but when they said it was Domain Chain, so I jokingly it registered Domain Chain way before blockchain. That was like over a decade ago, and now all of a sudden it's a blockchain domain name, which was never the intent. So it's definitely better to be lucky than good.
Sold it to D3, I hope. That's funny. Wow. Well, I mean, you gotta place bets in order to get lucky like that. So, uh, people got to take risks, and then you get lucky sometimes, and the stars align if you're not an idiot. So just place your bets. Well, that's fascinating. I'm still digesting this, but there's obviously, robotics is another trend we're looking at in AI that's sort of distinct and has its own, naming conventions and expectations that we can expect to see. Similar constraint on the number of companies as, robotics companies, also a capital intensive and very deep tech endeavor. But Yeah, I would imagine that's fairly picked over the robotics namespace at this point, um,
Well,
and
you
has
can't
less.
chase. I mean, that's the problem our industry is really bad at, is they chase so often. They're afraid to register and take um, big swings at things that are unproven. Like the biggest AI people are the people that were, they bought it in 2019, right? They bought it 2020 and were way paying way more than we thought anybody should pay for these names. And there was a point in time where all of them were questioning their decision. So I think it's good to get so early that everybody questions you and you even question yourself whether you should be doing it, because that means you're probably early enough to make a lot of money on it.
Yeah, I mean, it's an important question. It's like, when is that cutover point? When is it too unproven? Um, and understanding where your information asymmetry lies as a trader. You know, are you an expert in AI? Do you actually see things coming far more than the average domainer does? You have to put everything in context around your competition and what kind of information flow you have. Um, let's see, Andre, any thoughts here?
Yeah, can you hear me?
Yep.
Okay, I'm not really sure because being too early can be a blessing and a curse, I'd say. Like I remember circa 2010-ish, there was like a big push by people who owned future trend domains and on forums, and they had their communities and they were really excited. And it's kind of like it's been a sad thing from their perspective because I would say that the earliest adopters of AI naming trends have lost money. The earliest adopters I can think of were people, again, circa 2010, 2012, something like that, who amassed these huge portfolios of future trend domains. So AI, augmented reality, all of that stuff. And they really went all in. So they had, some of them had thousands of these domains, but eventually they became kind of a burden. So there's a balance to be had, I feel, uh, given the fact that, again, the earliest adopters of AI naming ended up actually losing money, right? And we have examples. What I like about domaining is kind of the fact that you can ask 10 people what they do and how they do it. They're going to give you answers that seem completely contradictory at times. But when you glance into their personal finances, you're going to realize that they're all doing well. So domaining is kind of like the space where you can do well with so many different business models. Like, for example, you're a member of the Empire Names WhatsApp group where James Booth is active, and you see the sales he's sharing and stuff like that. And I wouldn't say James Booth is someone who is necessarily always super early. He also managed to make really good money on stuff where he wasn't really early, but kind of he saw the potential eventually, and he got in and he acquired assets at good prices, and kind of he remained diligent in doing so. I think another example with AI is Luke Biggs. So Federer, he also went uh, pretty serious on AI, despite the fact that he wasn't necessarily super early. So it does depend. The problem, and I think Shane can confirm this, is that you do need a framework for making money and showing profits and making your business sustainable. Because what I think Shane can also confirm is that domain investing is an industry that attracts a lot of dreamers. So people who registered a bunch of augmented reality domains in 2010, priced them super high, burned through all their money, and then kind of became depressed and let their portfolio drop. So it's very difficult for me to kind of pinpoint what the right balance is when it comes to these things, given the fact that so many people have lost money, again, with AI domains. Like I personally know people who have lost a lot of money because they went all in on these types of names 15 years ago, let's say.
And there's
And
heavy survivorship bias where you're not
yeah,
hearing
yeah,
about
yeah.
The
That's
guys that are
exactly.
losing money, they're gonna sheepishly fade into the background, and you're only really going to hear from the guys who timed it perfectly and are bragging on X.
And I'm going to throw a couple things in there. I think a lot of the errors that you're talking about, a lot of the lost money, are the people that are trying to own a category. Branding is branding. It doesn't, when you own a good brand, it doesn't exclude to just AI. You know, Orion.com, it can be anything. The best one is a name that can be used for any category. So you're going to catch any trend because it's a good brand that works for anything. That's always been the way. But people that were trying to take VR headsets and take all the technology and do the actual category, that's never going to win. Nobody does that. Nobody buys, no company names themselves the actual category. So I disagree. The people that did AI, that put the keyword in AI.com in there, or bought a good brand and AI at the end, they've all done well if they were able to financially hold on. It's the people that were future teching and kept buying VR glasses and AR glasses and intelligent glasses, but even just glasses. They were buying hundreds of words that had the word glasses. Nobody's going to name their company. They never were. They never had a chance. And so when I saw these future tech people, I'd go in the forums and I just knew they were going to lose money. There was very little chance that any of them had a chance to make money. But when they bought names that were, general terms, they've done well. Or Booth, James is he's always late, but he has a financial ability to come in and overpay in a proven market, and he kills it. I watched him do it, and he was late to the Bored Apes and came in and made millions of dollars. He was late to AI, but him and Andy came in and paid $30,000 and $40,000 for the best names, knowing that they could turn them. They pay up for great names in a proven category. So he's the king of AI, but he was very late to the market compared to others because he actually comes in when it's proven and then just crushes it. So James is a very special character. He's one of the best that's ever lived at doing that. So, but all the people you're talking about, in my opinion, really didn't have much of a chance because they weren't registering the right types of names.
Yeah,
I
well put.
Yeah,
Go
I
ahead.
would I would partially agree with that for sure. But at the same time, many of the names the people in question registered circa 2010, 2012, if they would have registered them, let's say in 2021, for example, and kind of still held on to them, they would have probably been able to make good money. I think there are two categories of future trend domain investors, as they used to call themselves back then. People whose approach was just so outlandish and exaggerated and overly optimistic that they never stood a chance. And there were such people for sure, like you mentioned. But B, people who registered sensible names, but were probably too much ahead of their time, and life got in the way. And despite the fact that they registered names back then that today would easily fetch, let's say, five figures in an auction format or whatever, they were just a bit too early for their own good. So yeah, man, I would add some nuance there, that there are these two categories, and there have been people who did register reasonable enough domains, but they were just super early and kind of got unlucky. So yeah, what Brady said with the survivorship bias thing is, I think, important. And since Shane is here, it would be interesting to see what his since we've also mentioned James Booth and AI, what his perspective would be or is uh, when it comes to AI domains. So not AI as in the technology itself and its future, but rather strictly .ai domains. And I remember that both Shane and I have been active during the short domain mania that peaked in late 2015 to early 2016. And he remembers, I've mentioned this to Brady as well, he remembers these Chinese premium domains, which kind of went from being worth two figures to being worth low four figures each. And then they dropped. I think one is worth like $200 now or whatever. I'm not super closely following it. what is your perspective on this at current prices? We're taking a snapshot of the present right here in 2026. Are people who are buying .ai domains at auction at current market prices, in your opinion, positioning themselves properly, or do they kind of risk eventually, when once naming trends change and things of that nature, do they risk basically becoming Chinese premiums 2.0? So domains that won't be worthless. It's not like Chinese premiums are worthless now. They're worth more than they were before the hype. But if you bought at four figures, you're probably not in good shape now when it comes to these Chinese premiums. Do you think something similar will be at play with .ai, or do the numbers make sense right now for you?
Yeah, I definitely was part of the Chinese um, four number or numbers and letters. I was very fortunate that I got in ahead on the numbers. I was When I was brand new to the space, I was the guy giving the talks on why to buy numbers. Now, I was wrong in the standpoint that I was telling everybody that the world doesn't all speak English and use English letters, but we do all use numbers. So I was gathering numbers. I didn't see the Chinese thing, but when it did come, I profited handsomely. I also did get caught with names as it ended, so I have a lot of four letters that I did pay premium price. With AI, I don't see it tailing off quite as hard as that, right? I don't think it's tulip by any means, whereas some of the four numbers was definitely a tulip type strategy where we were just buying. We just thought it couldn't end. But AI, I do think we are at a point on the wholesale prices that the average person is probably going to lose money at the rates that they're charging at these auctions. It's gotten quite high. I think the reasoning is very simple, is the people that have had a lot of success and have made seven figures selling AI are rolling that money back into the auctions to replenish their portfolio. So they're knocking up prices to a point where the squeeze between retail and wholesale auctions is quite tight. And I think that your sell through rate traditionally compared to what you're going to get retail, those numbers do not play out. I don't think the math is there. Do I think you can find specific AIs at auction or third party that are listed poorly and resell them? Yes, I do think there's opportunity within that, but I think you're going to have to make some great choices, or it is the house is against you. You will definitely lose money if you don't get lucky or pick some good categories. At this point, I wouldn't advise to just do the auctions like you would a .com, because I think it's a really good way to lose at these prices. They are extraordinarily high right now. And do I'm not quite in Andrew Rosner's boat. I don't quite think that this is going to end for many, many years. I think we still have a AI boom till 2030. But I also agree with him in the fact that a .com name is where you want to be as a company. You don't want to pigeon your. I don't think AI will be AI. It'll be like everything else, where it will just be the norm, and you will be a company and a brand, and that you will use AI as a tool or be an AI based company. But you're not going to be called something AI. Right now, it was a huge fundraiser. If you wanted to raise money, call yourself an AI company and you can double the venture capital input that you were getting before. I think that worked really well. I think that's played out. I don't think that's quite as important anymore. So to kind of sum it all up, I think we're at a peak, yes, as far as prices, and I don't think the numbers match. And I think people are going to lose a lot of money that are new to the .ai auction that haven't experienced profits at this point.
Hey, Brady, can I jump in for a second? I have a really relevant story about what we're talking about right now. So I
Please,
was late
Renee.
for the
Welcome.
AI game. I only have a handful, like less than 10. But I was like, you know what? Let me spend about 30 minutes looking through the expired in the next 10 days for AI. Downloaded the list, went through. I picked three of them. And the first one came up this morning. I went to sleep last night. Oh, no other bidders. Great. I wake up in booth one and he paid over 3,000 for it. And so the point is that like yeah, I didn't get discouraged, but I'm also like, you know what? This is not a game for me to play where I'm at right now. But I went through the process of trying to find names. What would I think is valuable? Why would I find it valuable? So the learning curve for me was I found a name that I thought was good. And then obviously, if other people are bidding on it, I'm not saying that the end price is the most optimal strategy for anybody, but James is amazing at AI. So for him, he's just replenishing and adding names, and it makes sense for him. And it was a good name. But I have two more coming up in the next week, and I'd just be curious to see if, like, did I try to find something else that somebody else won't? And my first experience was, in the AI auction, it didn't work out, but it's not because, I'm not going to pay that amount of money. It doesn't make sense for me. But I think it's important that, if you're going to play in this level, it's going to cost you a lot of money, and you better have the capital, and you also better have very, very good name selection, and that might not even be enough either, right? I mean, because if you don't have a large scale of these, in the thousands of them for some extensions, then it's really hard. If you buy 10 or 20 of them for a couple thousand a clip, I mean, you're gonna either be waiting or have to price. It's not a winning game, I think, at that point. Uh, but yes, I just
You
want
know,
to
are
share kind
there
of some.
are there good comps for previous technology trends that, manifested themselves in naming? So say like mobile, blankmobile.com domains, and then obviously .mobi, which is a massive flop, or like, blankcloud.com names, when we were going through the cloud revolution. Like, what were you guys, bring to, like, as a comp to this .ai trend, or, blankai.com trend? Like, what is really comparable here? And then if we can contrast the actual technology adoption and what that means for, translating down into the naming conventions, I think, like, my gut instinct is like AI will have more staying power than some of these previous trends, because AI is going to move so incredibly rapidly, that, like, the frontier capabilities and just the impact that it has on labor markets, on usage of all technology, on global economics and world power struggles, like, just the it's going to change, and it's going to continue to change more rapidly than ever before, and AI is going to be the underlying driver of all of that. So that would seem to me to have greater staying power than something like mobile, which, had a big change in the early 2010s and then became ubiquitous, and then, plateaued, and now it's kind of boring. So I'm curious your thoughts on that, guys.
Yeah, I don't think there's anything remotely close to what we're experiencing in AI. There's no comps. There's
Yeah.
no we're blazing a new trail. Is in TLDs, there's never been anything, right? Like, we haven't had a new TLD that has generated the revenue and the trading that .ai has. It's not even close. I watched, Luke Biggs was a master of .info. Mike Carson was .io. He revolutionized the trading and the acceptance of .io. When .io came, that would be my opinion of the closest trend that we've had in the last 10 years. .io did not really exist as a market until Park.io came in and brought that to our auctions, and those auctions took off, and then there were some sales, and that's the closest we've had. But I would say that's 10%, 5%, maybe less than that, of what we're seeing in .ai. So there is no comps to it, and I think the technology, we all know AI is the most powerful, important thing we've had in the last 30, 40 years. Does that translate to domains all the time? Not directly, other than the amount of companies coming on and adding new companies that are taking names, right? That's all we care about, is how many new companies or new entities are buying domain names, and then what's the scale of funding for those companies to enter the market, and what does a domain do for them? Does it make that big a difference? .ai made more difference to a company than any other domain did. .com gives value, but AI was defining, and it brought more revenue. Owning a great .ai would bring tens of millions in funding to a company because they had a quality name. A .com definitely does that to people, but not in the same realm that we were seeing over these last couple years. But I do think that that's peaked to a point. I'm not saying it's less important, and I also think it'll last longer than my friend Drew says it will. But we are coming to a point where we're reaching a maturity level that they are going to mature to a .com and want to be just known as that name if it's available. Some are fine with it, some will always be .ai, but I do think that they're going to continue to look for the best, highest meaningful name, and that's .com. As well. So it comes down to branding and the use of that domain, and we have never seen anything like that, like .ai.
I think one of the other things that, as a domainer, I mean, I don't have these level of caliber names, but some of them, and I've heard Amar talking about this, is that if you have these one word .ais and they're really solid and the .com's not available, or it's 8 figures for some of these, and you have the AI, there's some startups where they want to just get revenue, ARR, and just scale up and then just get bought out, right? So they don't really, not saying they don't care about their name, but it's not frame of mind. I'm not saying it's the right approach, but a lot of startups you'll see on Raising Fi, the names are garbage, right? I mean, they're horrible. But for them, they're just getting money, they're raising money, they're trying to, so it's just one of those things where as a domain investor, it's kind of one of those, at a certain level, it's like, will it fade away? Maybe not, but will they, if there's a good buyer that comes along and they make you an offer and you want more, at some point it's like, do you, if they're a great fit, it's one of those like, will someone else come along, which is the case with almost any name, but especially on the higher end, it's one of those like they may never, want to go to the .com, or maybe they're happy on the .ai, right? And they want to just, cash out after a couple of years. And it's not everybody, but you'll see now a lot of these companies are either not going to make it or they're going to get consolidated down or get bought out. So it's kind of trickier, in the sense with when there's these names are so expensive to begin with, these .ais, that it's another thing to think about where, unless they're, the super generic, those will be probably a little bit more, I wouldn't say less risky, but you probably have maybe more decent chance. But some of these, I mean, it's interesting because it's like, what if they don't care about branding as much? And, we all think as domain investors, like, oh, their branding's horrible, this and that. But some of the founders just don't get it, or they don't care, or I don't know the reason. But that's another thing too. And, that people, I think, sometimes are like, man, why aren't they on this extension where it's available for 10 grand, but they just raised 10 million, right? And like, some of them just, it amazes me, but it's out there. Or on the flip side, where these other extensions like .energy and stuff like that are a good alternative because maybe their keyword energy.com is asking a lot of money, or the keyword is taken, or it's 7 figures by itself. So you're providing alternatives. So it's kind of a double-edged sword. I mean, we always want to get the best inventory, but then at some point you have to figure out what lane you're in and where you can allocate your capital to have the highest success to grow your portfolio. And if you're buying these names wholesale, AIs at 3, 4, 5, 10,000 a clip, it can add up quickly. And I think it's kind of just the ones that are good at it, they'll keep buying them, they'll keep selling them, replenish inventory, and that's their lane, and they're the best at it in the world, right? So I think there's other
I think
ways.
it's the jury's still out on how AI is impacting branding, right? There's two simultaneous massive trends happening that we're all speaking to here. One being the cost of code is just plummeting, and product is incredibly easy to replicate and compete with at this point in time. And that's only going to become more true. You cannot build product moats anymore. It is just impossible because your opponent can just point Claude code to your website and copy your entire website down to the pixel in an afternoon. And so it's just going to be a ruthlessly competitive product environment going forward, meaning that you're really going to have to survive on distribution, whether that be marketing or your brand with your domain, or that's business development partnerships that are more human relationship oriented, at least as long as that lasts. So that is, pulling focus away from the product and more towards the brand. Simultaneously, humans are going to be encompassing less and less traffic on the internet as agents are doing research and interacting with websites more and more. And agents don't have the same requirements that humans do for being able to parse the trustworthiness of a brand, and they can do, the whole Google SEO, algorithm is built around the assumption that humans are the ones using it, right? And so it's really oriented around human instincts around brandability, whereas an agent or robotic workflows can take into account the like raw underlying number of backlinks and actually look at other metrics of trustworthiness that are less grokkable to humans. And so in that world, what is the value of a domain if agents are doing all the browsing, and humans are never really looking at it. So we're being pulled in two different directions there, and I'm really not sure anyone knows how it's going to play out at this point.
Well, that's why they call it AEO, right? Answer engine optimization. It's a big business now. That's just people don't even know what it is, but it's taking off in the sense that it's answer engine optimization. So within the AI tools that you're using, it's the ranking system within the AI tools to be shown through like a Grok or through something like that, or through like Gemini. So instead of going from like SEO on Google, it's AEO within the actual LLM models and the rankings within what gets shown when people are searching for things. So it's still the analogy is kind of similar with instead of SEO, it's called AEO now, but that's big business and it's similar. And that I think that's going to be the next kind of a frontier of
You're breaking up a
optimization
bit,
within the
Renee,
models.
at least for me.
Oh, can you hear me?
But yes,
He just talks fast. He's not breaking up.
Sorry. So so SEO, right? Like so
CPU
AEO.
overloaded. Yeah, no, I'm familiar. I can
But the
speak to
point
some
is,
of
yeah,
what
but the point is that SEO is still going to be a thing, but it's going to be within the models. And I think the interesting thing will be is at some point, will all these models work with each other, or will there be some kind of cross platforms or marketing
breaking up
where,
again for me, Renee.
can
No,
anybody hear
I
me
can
or
hear him
no?
fine.
Um,
Let me jump
but
in here a little
oh,
bit.
you can
Oh,
hear
it's
him?
me. Yeah.
Yeah, I can hear him fine.
Oh, it's
Yeah.
must be me then. Am I breaking up previously?
No, you sound good to me.
Go ahead,
Okay.
Shane. You can take it over, but I think Shane will be or more articulate. But the point is, I think that it's still going to be there, but it's going to be different name, different terms, but the same underlying. I think ideology will still be important.
Yeah, I mean, and where I think is there's, we have millions of IPv4 addresses, right? Like we have addresses in code that talk to each other. That's a huge market. I mean, escrow's biggest finances are selling IPv4 addresses, not domains. Hilco sells more IPv4s than they ever would have sold. So there's always going to be these agentic names, and there's always going to be behind the scenes agentic talking, and we're going to bypass domains. But there will be an ever increasing growing a group of consumer facing brands. Branding will always be important. Companies with names facing forward will always be important. Will it be expanding? Absolutely. Will they be using a different way to get there, maybe for an initial purchase? Sure. But when it comes down to it, there will always be companies that want to be consumer facing so you come back and buy more. Because when it comes down to it, it's still a human making a purchasing decision. How they get there will change, how many places it gets there, more things behind the scenes will continue to exist. This is not this is not a zero sum game. This is an expanding game. So everything you guys are talking about, 100% true, is going to happen. But in my opinion, it's just going to expand to more brands and more people offering things that are consumer facing that are going to have to come up with a name. So I think we've got now three categories. We've got the high end domain names. We've got the area that there will be no domain names and there's nothing to sell. There's probably another category of just going to the registry and buying something or hand registering. But there's also always that category of what I call kind of quick picks, where somebody comes up with these little business ideas and they're going to take a two-word.com, blue volcano, green parrot, something that's a little less expensive, that's a spur of the moment purchase for a little thing that they want to start that doesn't hurt them financially too bad. There will always be that bucket of names, and anytime you see trends like that, that's only going to increase. There's more people. Brady, you said that you can the ability to code has become where everybody can build something. Well, a lot of people are going to build something they want people to come to, and they're going to come up with a name to have them be the consumer front, have something for them to remember to come to. And I think that's ever expanding. And so I think that is a category that will continue to explode, but it's going to be the cheaper domains, and anything cheaper than that will just be the registry. So it's going to be the high end, it's going to be the quick picks, and then it's going to be the registry. And there's plenty of that's expanding tremendously, in my opinion.
Speaking of, I'm curious, how have you all's adoption been of AI tools? I mean, we've seen anyone who's remotely plugged into tech Twitter has seen just the rapid acceleration and improvement of Claude Code and Claude's MCP servers and Claude Skills and that entire ecosystem, which really has matured in the past 2 months to the point where it's becoming a standard for most tech companies, I would say, to start to adopt these tools to get into their workflows. Um, are you guys using these? We talked last time we had a space a couple of weeks ago. We talked to Aaron Semenoff, who came up here and told us about his MCP server that he's built that allows him to scrape LinkedIn for businesses related to his domains, enrich the leads, and get contact info using Clay, and then actually like write the email for doing cold outbound, and then potentially even sending it all from inside the Claude chatbot interface. So we're really entering like this new phase of user interfaces, and work as we know it is changing quite rapidly, to where you basically have this army of Claude agents at your disposal at all times. So I'm wondering, we've been playing around with these internally at Unstoppable, and hope to have some exciting toys for you guys to play with soon. But I'm curious what you guys have seen on your end, and if you guys are adopting and trying out these tools.
Well, my opinion on this is, we've what he built was basically Apollo, LinkedIn Navigator, things we already had, but he was able to scrape it himself. I think we're all using the tools for a lot of uses. Obviously, Aaron has better skills than most of us to do it, but I think the big change is going to be in the APIs. I think everybody's getting tired of being scraped. Like LinkedIn does not want to be scraped of all their information, but they don't have a purchasable API to have that information. The domain industry is pretty bad about their APIs and allowing information. Like we'd all love to be able to manage all our domains through APIs, bring it into our own Clawbot, and manage everything internally on an LLM and manage their domains. But the APIs across the board in our industry are pretty horrible. I think in the future, what we're going to see is all companies are going to have pay per API, pay per use. Every single company will allow their data to be used in a non-scraping way that we will all be much more efficient, but they're going to want to get paid for that. They're not going to just want to be scraped. So I think right now it's a free for all, but I think very near future, you're going to see a lot of gates going up and a lot of pay per APIs coming together, and we're all going to win. We're going to pay for it, but we're going to have an incredible amount of data, an incredible ability to monitor things that we do, to manage things we do all internally in lightning seconds that used to take us months. But it's going to take API management and some kind of paywall to make that happen, in my opinion.
Yeah, that's a reasonable take. I saw some post that was basically saying, in line with SaaS dying and product edge eroding, all of your moat as a business boils down to the data that you have, which is exactly what you're pointing to here. And as your website becomes more and more accessible via agents rather than humans, then boiling it down to an API is the critical path. So yeah, I think there's a lot to be said for that. And then obviously, orchestrating workflows between different data sources, having specialized um, workflows and industry knowledge that helps you pull in all of those sources of data and then be the system of a record to help people execute these kind of agentic workflows. That's where the value is going to accrue here.
I think one thing, like, so from a business perspective, I totally agree with, I was talking to my buddy rep today about an API actually. But I think one of the things that everybody says that, we want this, we want that, but at some point, depending on what you're requesting and the features you want, just because it's all at our fingertips and we can aggregate all this information and all this data, like, it's up to the person's capability to manipulate that data, right? Like, especially if you're talking about it in a domain investing perspective or almost any asset class, right? Like, you know the most people want instant gratification where they're like, oh, tell me what to do, or what's the, like, aggregating data is great and it's really important, but it can also, one, go down a lot of rabbit holes that maybe, as we only have so much bandwidth as a person, that maybe it's almost like a den if you do, den if you don't, like a don't try it, or I don't go down this rabbit hole, am I missing out on something or an opportunity? But then also too, when you have all this data, it's going to be the person that is the most efficient, as well as having the conceptual ability to say, hey, I want to see this and that, and then you have to formulate your own opinions and your own kind of inferencing outside of what the model will do in the future with their own inferencing. So, because remember, in the domain name industry, most of us, if you ask us the price of a name, 10 people are going to get 10 different prices, right? So, I think data is a double edged sword, but I think people that will benefit the most are the ones that can actually have that experience, but also their own like set of eyes on it at the end to say, hey, AI, help me get to maybe 95% of the way, but at the end, let me kind of, handpick or go through and just, double check the work, or, does, maybe it's missed something, or I didn't see something. So I think that's a big important thing, is that we all want the data, we all want the information, but it's almost as useless if you don't know what to do with it than getting it, that's kind of my opinion.
If you guys could wave a magic wand and build agents to automate certain parts of your domaining workflow, what workflows would that be?
Probably all of us would answer, or let me say it, practically all of us would start doing outbound if that were the case, or at least I suspect that would be the case. Like, I really am looking forward to a dumbed down version of AI that can actually be trusted with outbound and that delivers lead quality that's superior to just me scraping the zone file and writing a script so that it identifies domains that contain my keyword, like in my own testing. And it's going to be super interesting. I hope we can have Aaron on again on the show to see how his system works in practice, because I'm not an outbound guy and the testing I do is very, very limited. But for the most part, and I agree, it's probably just my lack of technical skill, but the results in terms of responses back and things of that nature have been better with so far with just old school zone file scraping and identifying domains that contain my keyword. So if you have, I don't know, best cars, you would contact Best Cars Online, thebestcars.com, ourbestcars.com, and so on. That, for me, in terms of rate of responses and a couple of other metrics, has been superior to trusting AI. But what Aaron has done is, and I think he has compared to me, I think he has the technical skills to take it to the next level. But at the same time, I never have seen a case study of someone actually showing you in practice what the results are, how many leads they have identified, how many have replied back, how many sales have been generated. And it ties into what Renee has said. I do feel that at times I'm a bit overwhelmed bandwidth wise, and I think it's going to make sense for domainers to partner up. Like, I would love to partner with somebody like Aaron, where he can put his technical expertise on the table. I can put my experience with portfolio building and all these other areas on the table, and together we can achieve a lot of things, because you find yourself facing these dilemmas, right? Am I missing out by not trying to build my own AI agent that does outbound? Because there's also that, we would love to see a case study, but chances are that when people come across or build their own agent that actually works, I'm not really sure it would be the wisest thing in the world for them to make their results public. So I suspect that most of them will not do that. And so that once again begs the question, am I making a mistake by not jumping on this AI agent for outbounding bandwagon and stuff like that? So yeah, it's gonna. I do think that the people who get it right initially are gonna make just a killing, and I also think that eventually, like many other things, it's gonna be commoditized, I guess, to a certain extent, and I fully expect maybe even unstoppable domains themselves to kind of eventually offer these solutions for outbounding, so that in the end it's going to be yet another thing that gets commoditized, I think.
Let me. I want to jump in here. I think what people are missing here is AI is to improve a workflow you already have. We're talking about a lot of things you want to see, but until you've done this, you don't know what you're trying to improve. You can do everything you're talking. Apollo. If you take Apollo and you add LinkedIn Navigator, you can find anybody you want. Is it the best email for them all the time? No, there's probably some better emails, like friends will know a better personal email. But in general, I can get to anybody, any country or any company, and any person within the company I want between those two. I'd say 90% of the people I want. I can go in and write a script for each person individually or everybody within a category. So I can if I want to book a speaker, I can grab every speaking company that books speakers, put all their emails in there, send them, set 5 emails that are timed maybe 4 days later. If they respond, it'll send me a ping and say who respond. At the end of the month, I can see what my through rate on my email is, what my response rate is, how many leads I came from, how many personal conversations I had through it. I can track everything through Apollo. This has all been done. It's very simple. It's an incredible tool to do all the things you're talking about. But what I would say is maybe AI, I don't have to pay Apollo. So that's what Aaron's saying. I don't want to pay Apollo to get all those emails. I don't want to pay Apollo to manage all those emails and scripts. I want to do it myself. But it's already there. So to say that you want to do that, it's already there for you to do that. And for $200 a month, you can manage an outbound campaign perfectly and easily. And it's very simple. You don't need AI at all. But you have to know, where I'm going with this is you have to have a flow that works really well for you, that AI improves and makes it quicker and makes it easier and makes it cheaper. It's not inventing anything new. All the things we're looking at are being done. It's just more expensive and more time consuming. What we're looking for AI is to cheapen that and to make it faster.
I totally agree with you. And I was on a space a couple weeks ago, and I said I just wanted to cut down from my daily time of 3 to 4 hours looking through all these lists to be 20, 30 minutes. And then, and that's what I want it for. Not to try to find things I didn't see, just to refine my current process, like you said, just to be, if it goes from 4 hours down to 30 minutes, I can do a lot of things in 3.5 hours that I didn't have before, and that time's valuable. But I do think the other thing that you just said, Shane, that I think people is that just because there's these processes and these tools, if you're going to drop that, you still have to have names that make sense, right? You can't just think that it's going to work with every name, or that it's, that it's very, outbounding is very specific, and, it's a certain type of name that works, or geos. So like, it's not just, like, yeah, the tool is great. Like I had for one of my jobs, I can track emails, who opened it, when they clicked the link, all this stuff like that. But it's like, you still have to know who you're reaching out to. Is it the right target? It's not, again, it's one of those things, like all these tools are great, but if you don't have your own thesis or what you're doing or why you're doing it, everyone wants everything to do it for them. That's just not going to happen. You know what I mean? Anytime soon, in my opinion.
Yeah,
I'm a lot more bullish on AI disrupting workflows here, but I want to play out an exercise. So we're observing the death of SaaS. We talk about product edge eroding. Um, what happens to the domain or competitive dynamics as AI tools proliferate? So obviously, outbounding is one area. Potentially, people are getting spammed more often for domains that might have some negative consequences for mid-tier names, and we'll also see probably tools emerge that help sift through expireds a little bit more efficiently. I would say like expireds, that's a fairly efficient market as is. There are a lot of people looking at expired lists. The search tools, expireddomains.net, are not great, but they're also decent at the same time and have fairly rich data. We'll see that become more efficient, but not too drastically different than where we are now. Where we'll see, hand regs become even more efficient as people are able to foresee trends, ideate names much more easily than they could. We've already seen this with ChatGPT. Um, you know, Previously you guys were looking through a thesaurus and a dictionary and smashing words together in a name spinner. Now the workflows obviously go to ChatGPT and help it ideate words with you. So we've already seen impact there, but play this forward a couple of years as everyone uses AI tools for every valuation and every other part of the domaining workflow. Where does the edge remain? Where does your ability as a domainer uh, let you leverage unique expertise that can't just be outsourced to the machine god? Is it relationships with other wholesalers where you can pick up names for cheap that purely are relationship based and not open on the open market? Is there industry knowledge, or is it something else? What do you guys think? Like, where does their competitive edge still survive as these AI tools proliferate?
Yeah, so I think that competitive edges pertaining to technical skills are going to be quite difficult, or like you said, those modes are going to be for the most part dead. And to what Shane and Renee mentioned, I think they're overestimating the technical capabilities of most domainers. Like I would say 99% of domain investors, if we were to ask them about outbound, they would literally want a tool like ChatGPT where they say, hey, this is my portfolio. Please choose the names that are worth outbounding, then outbound them and make them send all my replies to my@email.com, stuff like that. And so people like Aaron who have technical skills that enable them to do stuff. Fair enough. I'm not saying that solutions don't exist that kind of get the same thing done for a fee, but regardless, it's still some kind of an edge. The fact that you have technical skills, and I suspect that it's going to be more difficult moving forward as all of these solutions get more and more dumbed down and more user friendly. It's going to be difficult to develop and maintain a technical edge. And I think your instinct, Brady, is kind of correct, that it's going to depend a lot on uh, relationships. Like I deal a lot in wholesale, and there's just a lot of data that these models will not have access to. Like, for example, I sold 1,000 domains in November, 500 in December, and about 500-ish, a bit more, this month in January. And zero, obviously, these are my peanut gallery sales, and they don't get reported anywhere. But I'm saying it's still 2,000 sales that nobody will ever know about. And in having these sales, I keep in touch with people who buy from me in bulk, and they buy from me in bulk for various purposes. Many of those people, like David Sustiel, for example, they have their own buyers to whom they flip various domains. Like maybe David has a buyer who needs uh, domains related to crates, for example. And so that's a certain niche that he's mining there, and he has access to buyers. And once again, debatable how many of those sales end up reported, and all of these things are happening in a way that goes kind of under the radar and cannot be easily replicated by AI solutions. So I think that whether it's domains or anything else, it's going to be the human element that's going to be that's going to be more difficult to replicate. The relationship I have with my buyers, the relationship they have whenever they have certain buyers, like the developers who buy domains from them on more than one occasion, and basically these types of things, I think.
Yeah, I think that you'll, regardless of technology, the people that hustle and the people with money will always win. I mean, they'll always stay on top and stay ahead. It doesn't really matter what new tech you have. So, the question that the hustling, and Josh reasons in this the audience, he's and I say hustle in a good way. I don't mean scamming. I mean hustle and putting the work and coming up and constantly asking, can I, or how do I do this, and talking to people that work with us in technology. Everybody who's hustling has a person that handles the tech questions for them. I have Travis. Every day I say, is it possible to do this? And the answer every day becomes more yes. But we're always saying, I need a tool to do this. I need a tool to do that. Can I do this? I need to do this in a certain amount of time. And every day that answer is expanding on what we can do and how fast we can do it. But what will never be replicated is the people that are searching out. Andre's talking about, I wish that AI could do this. Well, the people that wanted to outbound found the tools to outbound to do all the things they want to do. It's always been there. So I still keep that thought. But no matter how we progress, yes, there's going to be more agents bidding. A lot of us have bidders in the auctions already. The big guys already have the proxies and the bots bidding for them. The biggest people have bots all over doing bidding. That's just going to be more people doing the bidding. That means margins are going to get tighter, things are going to get tighter, names are going to get pushed up. But what's just not going to change is the people that are always hustling and trying new things and asking questions and trying to improve. They'll always be the winners, regardless of where the technology goes.
And I'll just chime in with one thing. I agree with you 100%. People are already doing this. We see it every day in auctions with certain companies that have bots out there that they have the criteria. They'll bid up to a certain amount, and they just every day they do it works for them. The math works for them. But I think going forward, I think that one of the biggest opportunities is finding names that are mispriced. Well, number one, if you can, or number two, making offers or maybe trying to get names that way. Because I think auctions, like expired auctions, just going through the roof. But I think there's a lot of alpha, or when price changes happen, or someone had it for 5,000, now they dropped it to 2,000, right? Stuff like that. I think is where you can really find them. I guess the next level of alpha, because if as if you say, I don't believe as much as in what Brady says in terms of how it'll erode the people that are hustling and out there that are grinding. I mean, there's so many names out there every day. It's not even an issue of tools, or it's just bandwidth, and just I don't want to be here 24 hours a day in front of my computer, and that's so. I think that there's just a domain's hard to value. Number one, that'll always be the ace in the hole for domainers who can find an edge, is that most people don't know how to value these, and even if the ones that are really good at it, it's an estimate to their experience and the data they have, and it could go for more, it could go for less. But the fact that 10 of us, again, I repeated this, 10 of us will have a different price, or when we'll be close, the ones that have, better gauge on it. But such a dispersion, right? That a model will never be able to be that good. At least in the next, I'd say 10, 20 years, or but the point is that finding things mispriced, using tools to check price changes, things listed incorrectly across platforms, trying to, maybe, reach out and get things on a discount or throw an offer out there. That's where I think another level of alpha will always be, because, that's not so easy. It's, you got to look and hunt and search, and everybody can download expireddomains.net, right? But to actually look on, like, DNX is an amazing tool. I mean, I use it all the time, and it's just great. It makes a lot easier than having to, try to search different marketplaces for the same name or different names. It's just all right there. So I think that's the next level of alpha, where you can kind of scale, level up that way, where you can start to find things that maybe you think are mispriced. And like what Josh told me a couple months ago, is going, if you find an area, find a niche, mine it out. But if there are names in that niche that someone already has, which obviously there will be all the time, go and pay up for them a little bit, and grab the best of the best. And that's really stuck with me recently, is that and also Tony Names tells me all the time, if you find an angle, mine the hell out of it as soon as you can, because it's just, especially now with social media, I mean, it takes one post or two posts, or somebody shares, or it gets reported that this sale sold, and everyone's like, oh, I never thought about that extension, and then it just the prices get out of control, and so I think that's kind of one of the things that's not talked about enough, is that I think sharing is great, and I share almost all my sales, but I feel like a little bit of an obligation to be like, just because this name sold, or just because I sold it for this price, like, there's a method behind it that, or my selection process. It wasn't random. And right now I'm seeing in all these Discord groups, like, all these hand registrations, like, Brady, great job, $6. It's amazing. It's a great price for the domain club. But at the same time, I mean, some of these names people are registering, like, they're just lighting money on fire. So, I kind of sometimes feel like, should I really share this sale? Because, it's not, they're not all going to be like that. And so I don't know, that's just kind of my thing I'm struggling with recently is how much to share, what to share. And not because I'm hoarding it, but just because I don't want to people just see these promo pricings or discount pricing and start buying 200 of this extension or 1,000 this extension. And then a year later, they didn't sell any and they go, they lose all their money. So that's kind of where I'm thinking a lot more
Yeah,
about now.
that's the Mike Mann sales effect, is seeing seeing one-offs in a enormous portfolio and overfitting to these rarities. Yeah, it can get you in trouble. Well, that's very responsible of you, Renee. Um, you know, our prices are always are going to be increasing. Obviously, we had the big increase in December 1st, and we'll expect to raise prices again here in another month or so. So we'll do our part to tighten up the scrupulousness of anyone hand registering on Unstoppable. But make sure you guys take advantage of that while we can. It has been very heartening to see a lot of new quality domainers come out of the woodwork and talk to us. I think the ICA gift and really just Unstoppable having a firmer presence in the market and sticking around long enough for people to take us seriously has really caught people's attention. We're in the Afternic network. We're about to launch back orders this week. Um, we've got LTO and solid landers and self brokerage and everything else you need. And so I think people are finally starting to take notice. And I'm glad to finally get replies from all the people I've been cold DMing over the past year. And it's good to see people appreciating what we've built as well. People that know their stuff. So um, yeah, just make sure you guys are taking advantage of that pricing. Again, it is promotional. We were subsidizing all of you users because we were not established in the market. So now that we are established ourselves, that pricing is becoming much more moderate and in line with competition. So just know that those increases are coming, and get your names in while you can. So, yeah, I want to change gears a bit. And Shane, I know you've been on a while, so feel free to drop whenever works for you. But, one thing I'm curious about is obviously you have a strong background as a trader in a variety of markets, not just in domains. So I'm curious, what are you paying attention to in the broader markets? We've got a lot of stuff going on. Obviously, the AI arms race heating up with China, that build out on reshoring a lot of heavy industry and resources. They're looking to be a cash grab and potential tensions with Iran. Meanwhile, American consumer credit looks fairly strong. You know, consumer debt to GDP is at a very healthy level, while government debt to GDP continues to skyrocket with no end in sight, and potential. Obviously, Trump is a very socialist president, surprisingly enough, and someone who's very much willing to, use fiscal and monetary policy to achieve his political ends, and apply pressure where it needs to. All of it to me points to inflation, monetizing the debt, and gold and other hard assets doing extremely well. But Shane, how do you make sense of all of this, and how are you positioning yourself beyond domains into this turbulent period we see?
Well, I think it all comes together. I think I make a living on volatility. Make a living on mispriced assets, whether it's domains, whether it's the markets, whether it's the government. That's how I make money. I know that things continue forward, but I know that they don't continue in a straight path. So the way I do all my investments is I start with infrastructure. In order to do all the things that we've talked about on this spaces, requires infrastructure. We know that AI, we've talked about its importance and how it's going to change everything. But the reality is that has to be built. Who's going to build that? That's the questions I ask. Who's going to build that? How are they going to build that? What's the future going to look like? For instance, we're not going to put 20,000 million miles of cable and copper cable across our country, our world. It's going to be optics and lasers. There's no doubt about it. We can't afford to do it any other way. So of course I'm going to invest in that. Every time Trump makes a tariff and changes things and things drop, I know that he's going to change his mind and come around. So that volatility is fantastic for trading. I love when things drop when he says something stupid. It's an incredible opportunity to make money. But I always start with infrastructure, and then I make my extra cash by all the dumb things that come out that everybody reads and everybody listens to. We get so caught up as individuals and making instant moves and thoughts and processes on individual statements when if you look at the long term, it's always going to flatten out. So every time it's not flat, I trade it, and I put my money knowing that it will flatten out and I can make money in those areas. So that's how I look at it. I don't really get caught up in Trump. I've got 3 years of it, but I got 3 years of incredible volatility to make a lot of money in it. Do I want to own the dollar? Probably not, because it's definitely becoming worth less, but it's always becoming worth less. Do I want to be in Bitcoin? No, because I don't think it serves the purpose that it used to. And I think that social trends are moving towards other investments. We all are gamblers in this industry, and what we see on X especially, we are gamblers. And people were in Bitcoin because they were making a lot of money. When that trend goes away, they're going to move to something else that can. So my overall statement is infrastructure will always be the most important. And what do we need to build right now? And obviously AI is a huge part of it, of what we're building. So I want my money to be in that. I want my money to be in increasing assets. So I don't want them to sit in the dollar. And then I want everything else to be complete chaos so that I can play the opposite of that when it straightens out.
I think something that people, and Shane touched on this, but for example, like the grid in this country hasn't been updated in like what, like 50 years probably, if not longer. So all this stuff is great, and all this capex is just, I mean, like OpenAI has like what, like over $1 trillion of commitments in capital. I mean, I it's just some of this stuff is not going to be able to just money's not, I mean, you can print money, but that level of money, it just doesn't, no one's going to print that. So I think a lot of things right now, if you're tied to certain players in the industry that have made all these commitments, and that's your huge percentage of your revenue or your promise to your investors, I think those companies are in a lot of trouble. The ones that are kind of like that aren't as dependent on these bigger players, um, I think they're going to be able to withstand, some of this volatility and the delays in building things. I mean, you can't just build these plants overnight. You can't just update the grid overnight. It's not that simple. And look at memory right now. Memory is so expensive, right? Look at SanDisk. The stock's up like 1,000% in like 6 months. I mean, so all these things that are needed, we're so behind in expansion and building factories, and they can't put memory factories online for another year, SanDisk. So and then that goes into the iPhones, right? And it goes into everything. So I think there's a lot of bottlenecks that are going to be hit really hard later this year that is going to kind of bring things to a little bit of a halt because, one, you got to find the capital. If you find the capital, you got to go build it. And then, look at Oracle. They're having to finance all this debt to build all these data centers to try to do these RPOs that they have for these companies. That's such a low margin business. So, I mean, it's very circular to an extent with some of these companies. And I'm not saying it's anything like nefarious or fraud, but it's like, it's just they're all trying to do the same thing, and there's a limited amount of resources, and it's, at some point it's going to have to just, it's going to take time. And as investors, they're patient, but you start saying, oh well, we're going to invest 100 billion in capex, but this year it's only 50. You might get rewarded as a company that's cutting back on expenses and being more disciplined, but all those companies that counted on you for that capex of that 50 billion that you just cut out of your own budget, their stocks are going to go to nothing because you were their biggest customer. So I think that's going to be the kind of canary in the coal mine for the rest of this year, and most people aren't realizing that at this point, I think.
Yeah, I mean, Renee and I talk about this all the time. I use the analogy of like hiring and then delivering. Right now, we're seeing the hiring phase where people are being assigned contracts to do things, and that's great. That's really important. When you hire someone, you're hiring them on a resume, but what it really matters is when they deliver. So that's where the important piece is: who's going to be delivering. When you look at something, talk is great, contracts are great, but the delivery is what's important. So I think we're going to see what really happens over the next year, and where do we move forward. So the way I play it is I'm putting some in for the announcements and the hiring, and then I'm going to double up on the delivery on these types of things. So I think it's really important. Chatter and talk is exactly that. It's when things actually happen to deliver. When you see something set up, or when you see successful, and I talk about Bloom Energy too much. I know I talk about it, I apologize, but when Oracle comes in and says they want a data center set up, and they say they can set it up in 90 days, and then 55 days later they've got half a gigawatt power source already done, completed, and running. That's where that's when I went all in. That's when I pushed my chips. They delivered, and that's what I want to see. I want to see deliveries on things.
Yeah, I remember reading that one of the most cost-effective ways to just add power capacity in the US is not actually increasing the peak like wattage that we can output, but actually just adding batteries such that we can capture, have more uptime on all of the generation capacity that we already have, and then store that energy and reuse it during peak demand. So that certainly makes sense.
One more huge thing that I think people
Tesla's not a great bet on that front, given that they are already 400 times earnings at current levels. But yeah, there's certainly a lot to be done there.
But Brady, I think one thing that people don't, or they're seeing today, right? There is a ton of leverage in the system, a ton of it. And these unwinds are nasty. I mean, silver's down what, 28% in one day?
Is it? I mean, the hyperscalers are investing free cash
No,
flow.
no, no.
Like
I'm talking about
Google,
like just
Amazon, Microsoft, that is all like just these are the greatest businesses that have ever been built in the history of the world. And those guys are just reinvesting that profit. Sure, you can say OpenAI and Anthropic are, doing some fuzzy financialization to move things, but even they are, the fastest companies to reach a billion ARR in history.
But what I'm saying is that like leverage in the financial system, it doesn't matter if it's stocks or I'm just saying in general, the leverage in the system is really high. And it's obvious today with gold and silver. Gold moved 10% in a day. Gold is a massive asset class, right? Silver is much smaller, but 30, I mean, these things in the financial system, like change the volatility, there's a lot of opportunity, but it's also, you have to have in the back of your mind, this is not normal. These assets moving, like Microsoft was down, what, 14% yesterday, lost like 600 billion in market. I mean, these are really big moves for large assets. So it just shows that no matter free cash flow, which I agree, all that stuff you said is correct. But people this day and age, just it seems like asset managers, people are chasing returns. They just want the hottest thing. And the fact that these can move so quickly in one direction, it just seems like it's exponentially getting bigger and bigger every year. Like, a couple of years ago, Microsoft would move 5%. Oh, that was huge news. Now it moves almost triple that in one day. I mean, this is very outsized moves for these assets. So it can be good if you like it long term. You could buy the dip, whatever. But I'm just saying that, like, at some point, you know, people and things can go the wrong way, and everyone will stampede to the exits at one times, and things go down a lot faster than they go up. Shane, you know this better than
Well, I'm
anybody.
saying I love it.
So
Like, I'm the opposite of you. All the people that are hand registering and losing all their money, I don't care a bit. Like, it's them. I love the volatility. I love the fact that you could lose all your money if you do things stupid. I'm definitely not a person for a political party. Like, if people want to do dumb things, let them, FA fuck around and find out. Like, volatility is how you make money. And where we're talking about earlier, the spreads tightening in domains, the financial markets are kind of the opposite. The leverage and the volatility is just huge. And to me, I look at that as an opportunity. I don't worry about the whole world losing their money, because I don't think the whole world will lose their money. But I do think there is going to be a guy across the street that went 10x on Microsoft, or put too much money in calls and lost it all overnight. That's definitely going to happen. But when it comes down to it, as a thesis, or not a thesis, but a reality, is gaps and volatility is how the most money is made. And inappropriate or pricing that is not efficient is a great way to make money. And I look for it. That's how I do it. The tighter it gets, the harder it gets. So I enjoy all this stuff. All the things that you're saying are 100% right, Renee. But man, I sure love it.
No, I enjoy it too. Listen, I know. I mean, I traded for years. I still trade, right? And I worked at hedge fund for 5 years. We printed money on volatility. I mean, that's what you want. But I'm saying in general, a lot of people like mom and pop who are just like, oh, I bought gold and now I'm down 30%, stuff like that. When you're talking about like the bigger picture for the economy, it one if you and I we traded, we love it, we embrace it, right? But 99% of people, maybe even more, don't. That's not how they. That's not they don't enjoy it, right? But same in domains, right? Like people email me a list, hey, I got 200 names to sell and I want $20. Well, I'm like, all right, well, I'll give you $10. And then they're like, okay, I'm not saying like, some of that, but like there's deals to be made when people need liquidity or, the volatility or mispricing. So I totally agree with you on that. I'm just saying when Brady said as a whole with like things going forward, there's just so many things that are going to create bottlenecks that like, you know, it's just going to be a big shock to most people that when things start to, if they do turn a different direction, they're going to be like, oh, screw this. I just lost my money. And then they hate the stock market forever. You and I, okay, we have long-term horizons. We can wait it out and we know what it compounds every year, our money. So, it doesn't bother us. But I think for the majority of people, it'll be interesting to see this
But
next
I
couple of
think
years.
it's important, or it's good education to show people how they can manage those. Like you and I, again, this isn't domain related, so I don't get too far off topic, but you and I were talking about if you own a stock, you can sell that volatility and just use it for income. That's not something that people understand, but with AI and their ability to type that in and have them completely explain how to make that possible, I think that's one of the benefits of information is how, but that's again, that comes down to wanting to know. You AI is no good if you don't want to know something or want to learn how to get better and how to use that tool. I've said this on several spaces, but AI is leading us to mediocrity overall because the people that aren't very smart are going to use it to become or at least appear a little smarter, and the people that are lazy are going to use it to do tools, and just everything's going to come out. The results are all going to be the same. But the people that really want to get better and learn something else that can be financially beneficial, that want to learn how to do something better, that's where they're going to learn about the things we're talking about. And if we can put seeds in their mind saying, hey, this volatility won't crush you, here's how you can make money on it, and putting that out there in the combination with AI, this is where I think AI is going to just help a lot of people be better, but it has to be a seed of wanting to get better and learn the things that you're talking about. And that's, again, not changing. The people that want to get better are going to get better and they're going to use AI to get it. And the people that don't are not. And that's just the test of time. That's been for centuries how things work.
Yeah, if I can chime in a bit, I do agree that not everyone's going to lose all their money, and it's not my point to make that we should get all doom and gloom, but also to what Renee is saying and to what Shane is saying about investing being also about identifying blind spots in the market, for example. And I think that to bring the discussion back to domains, there's a major blind spot in public perception when it comes to the probability of an extended downturn occurring. And to that effect, a discussion I had with someone with a larger portfolio than mine, he had about 50,000 domains. Like Shane said, hustler, go-getter, he's doing very well for himself. And we started discussing stuff, including economics. And then I said, okay, how are you positioning yourself? I was curious for an extended period of just not volatility or whatever, but no, kind of like post-Great Recession, a relatively extended period of kind of depressing market activity. And he was like, well, I think I'm going to be fine. My portfolio didn't do so bad during COVID. And I think this is kind of a blind spot people have, because when you tell them about a downturn, they think about COVID. But in fact, COVID, yeah, sure, March 2020 sucked. A couple of months over that year sucked, but then came 2021, then came 2022, which were great for assets with stimmies and grants and loans and all the money you could want. That wasn't really the type of downturn I'm referring to. And I think that especially in our world with like Trump politics, and now we're talking about Greenland, and then we're talking about Iran, and then we're talking about the new Fed chair, and kind of like ADHD on steroids. I think there's a blind spot here when it comes to people's willingness to accept that eventually, and I have no idea when, but eventually, an extended downturn will probably occur. I don't think not even AI is going to bring about a new paradigm where we're never going to go through a period of what happened after the Great Recession, for example. And so I think
It's impossible, Andre. It's impossible. Trump's ego is tied up in the SPX. Like any downturn, immediately loosen, print, stimmies, the whole 9 yards. Meanwhile, like the AI is just going to increase productivity at such a drastic rate. We're already like this is going to be the year of agents like actually becoming useful. I think you're going to see like reasonable uh, reasonable penetration of agents into white collar workflows this year. Some reasonable amount of layoffs. Maybe we will regenerate some jobs as more and more companies get started, but it will be hard to replace it. Like the bar of useful and economic being a useful and economical white collar employee, that bar is being raised very, very rapidly. And many humans are not going to be able to keep up with that bar and keep their heads above water. So, AI productivity skyrockets. I really do think like we have 3 to 5 years before, AI is completely capable of doing most jobs that humans are at a computer.
so. Are you?
In that world, even if we have like hot war between the US and China. We know we're bombing data centers. We're, trying to seize Taiwan and semiconductor production. Even then, like the returns to AI companies are going to be so massive in a defense oriented use of AI. Like still we'll see like outsized returns from those guys. And obviously this adds fuel to the fire of the trend of the Mag 7 just dominating the rest of the economy. But it's really hard for me to see a situation where one, it's politically acceptable to have a long-term drawdown, and two, AI productivity doesn't pull us out of it incredibly rapidly. At least for like the stock market. As for Main Street, that's a totally different situation.
It's not so difficult for me to imagine that. Like things can happen. Trump, whom you've mentioned, is of a certain age. He could die. Republicans could lose the midterms, and then he could become like Ted Cruz said, a sitting duck type president who gets impeached, and then nothing gets done politically. Like I'm not saying it's my dominant scenario, but I'm saying that the probability of us going through something like the Great Recession and the post-Great Recession period, where it's not necessarily, oh my God, all this volatility that can be leveraged, but rather just downright depressing economic activity, which, by the way, affected back then domaining tremendously. The 4-letter domain buyout failed and stuff like that. So I'm not saying, you should come join me on my farm and on a hill here in Eastern Europe and bring guns and ammo. We're not even allowed to have guns here. No, but what I'm saying is that I guess we're going to have to agree to disagree on that, because my position is that the probability, even with AI and even with this entire context, of us going through an extended downturn, and not just something like COVID, which is really bad for a couple of months, but it's politically unsellable. So you fire up the printing presses and you give the fiscal stimulus a go as well, and you stimmy up everyone and grants and loans and all that stuff. Yeah, maybe, but I'm not. I do feel that people are completely discounting the possibility of that not occurring. Not because I'm the first to say that it's very difficult to sell anything other than instant gratification on the monetary and fiscal front politically. I'm the first to admit, but at the same time, it's not that difficult to think of scenarios where, again, Trump dies, sitting duck president, even with AI. Is it that hard? I'm really curious. What, like Brady, for example, what probability would you allocate to the scenario that we go through more or less Great Recession 2.0. So a major crash, a major unwind, and then followed by a couple of years of just kind of depressing economic activity. What would your what kind of probability play do you see here? How would you, if you were kind of asked to do it, how probable in percentage terms would you say this is, and kind of why? I'm curious.
I mean, large crash, I put that probability very, very high, right? Like it's inevitable with how stratified, the markets are becoming, and as Renee is talking about, like, volatility increases and a lot of value is being created, and we're seeing a lot of frothy betting from retail and professionals alike. So the probability I put at a crash is incredibly high, like 80 plus percent. Like we'll see 30% drawdown in a lot of these companies easily over the next couple of years. What I'm very bearish on is the fact that that will outlast, like, more than a couple of months before either intervention in fiscal and monetary policy or I mean, shit, like, the US government stepping in and buying parts of these company, nationalizing them, and keeping them afloat that way, or uh, so, like, or productivity and the actual promise of these AI agents actually coming to fruition, just absolutely dominating any short-term correction and frothiness that we see. I really do think, like, the capabilities that we're going to see in the foundation models and the agents, built on top of them are just going to steamroll any other consideration here. And it sounds simplistic and overly optimistic, but I'm not saying we're going to see less volatility. I think we're going to see more than ever. I think that volatility is going to get paved over by actual capabilities improvements.
So your
I
position.
mean, as we're talking about this whole discussion, and I turn on CNBC, and it says the headline is AI market constraints for capacity, right? So, like, we're all in this room kind of saying similar things. Like, and I think, Brady, I think you're way too bullish on the how impactful AI is going to be, because I think that you maybe are underestimating the lack of infrastructure and energy and power. And I, Shane, you love Bloom Energy, but like they're only one company, right? I mean, like it's not gonna happen overnight, and that is gonna be the bottleneck. And people just, I don't understand why they don't see it. They just want to ignore it. It makes no sense to me. And things just take so long to get in movement, like, and by the way, not to mention the red tape to build this stuff, to have to go to cities and say, hey, we need to do this, or if they can't get enough power right now, then everyone's finding a different way, but this takes time, and it's just, that's going to slow down AI significantly. um Maybe not the spending,
The
but the
demand is there, and the hyperscalers are obviously competent enough to orchestrate a lot of this, and the administration is incredibly buddy buddy with them, willing to cut red tape and get things moving. Obviously, not an easy task, but
But the hyperscalers
um,
have to, because if they don't, the other ones will. That's the difference, right? They can't afford to be left behind. So they're all. It's like, it's AI spend right now. Spend as much as you can, right? And they have the cash flow. They have the capital. They have the capital. But I'm just saying, like, just because you have the capital and you're spending, at some point you're gonna need the nuts and bolts, the infrastructure to make it happen, and it's not there. So it doesn't matter how much money you have. Money is not necessarily gonna fix all these challenges. You know what I mean? That's what people. It's the ingenuity to build things and different ways to deliver things, like Shane said, with different technology, right? That's going to be what leads us out of it, but that's takes time, and that's the thing people don't realize. It takes time for all this stuff, and that's going to slow down AI because of, and there's no arguing that, I mean, in my opinion.
And I've actually got to jump here because I've got family obligations. But I'll just say this, with all what you're saying here, what you want to bet on are the people that are first in line, because Renee's right. It's a bottleneck, so you want to make sure and do your homework and find out who is going to be first in line to get through that bottleneck, and that is going to be what Brady said. A lot of the mag, or the big seven, and the big players in the industry, but if you can find out who's first in line to get things done, those are going to be the winners, in my opinion. So, and that's all I got to say. I didn't mean to talk so much about non-domains, but hey, this is all the backbone of what we talk about, and that's who's buying our domain. So it is a good conversation.
Oh yeah, I mean, domaining is one asset class. Important to have the holistic picture. But thank you, Shane, for coming on. Appreciate your time and getting to pick your brain a bit. Hopefully you got all your energy names registered by now because the competition is flooding in as if it weren't already.
Well,
But
all
anyway,
good.
appreciate you dropping some alpha
Yeah,
here.
thanks for listening to me rant, everybody. Everybody have a great weekend. Appreciate it. Thank you.
See ya. Well, guys, I think we covered a ton today. Andre, any final thoughts?
Well, basically, I would say just the fact that it's important to not be a downer. So I'm all for you guys being optimistic, and I think this is the way to go. And if anything, I'm professionally inclined to be a bit of a pessimist. But at the same time, I would urge people to at least acknowledge and spend maybe a day of their time, or if they're fasting, when they have their clear mind window to think about these things a bit. Because yeah, I mean, sure, banks and government central banks and governments will be super accommodative when it comes to policy, but there are also things that cannot be solved by sheer liquidity. Like if you go from having a liquidity crisis to a solvency crisis, let's say. So the difference between a temporary shutdown like COVID and the financial balance sheet type crisis we had with the Great Recession and whatnot, there is, I think, I guess this is the point where we're disagreeing. I think there's a reasonable possibility that we have something like the Great Recession. So, like, according to the National Bureau of the NBR, it was like 18 months, the Great Recession. It was a recessionary period that took 18 months, if I'm not mistaken. And I don't think it's the worst idea in the world to prepare for something similar, for something for a year and a half, a year, 2 years of, again, not volatility, not craziness, because we're already used to that, but rather just depressing silence brought about, for example, by private sector deleveraging, which can be quite difficult to overcome through just policy tools that central banks have, as we've seen after the Great Recession. And that's kind of my idea. Just like what I do in domains personally is, I know Renee is not doing it. He's super he's more aggressive than I am. I'm also active on the wholesale market because I do try to keep my portfolio under 10,000 names. I think that the four-figure zone in terms of portfolio size and keeping it certainly under 10,000 is the Goldilocks zone for me. It's kind of a place where I can make my money, I can make my moves, I do have enough volume to test things and to be happy with the confidence I can have with my results within reason, of course, but at the same time, not putting myself in a position, let's say, where something like period of a prolonged recessionary period will basically ruin me. So I'm kind of like trying to avoid that type of risk of ruin. And to me, that's the Goldilocks zone. For people watching us, I'm sure it can be completely different, and their math doesn't necessarily have to coincide with mine. And it's certainly not my place to kind of convince people that one way or the other is the way to go, but rather just say that I don't think the probability of having something like an 18-month long recession is being discussed enough. And so allocating at least kind of a bit of bandwidth in that direction is the way to go. Other than that, I just want to say I hope people appreciate what you guys at Unstoppable have been doing. I think that once your promotional pricing gets tapered off, they're going to understand just how good the industry had it for the period in which you guys were super active. I keep telling, I always try to kind of do my part and convince people who buy from me to just sign up for an account and let me push their domains there. And ironically, Unstoppable Domains has even made money for people who don't have accounts there, because whenever I come across a person who buys from me from that domains, and they say, no, I want to transfer the domains to GoDaddy, just give me the authorization code. Even that person made money because I make money thanks to Unstoppable due to how cheap it is for me to replenish my inventory, and I pass those discounts on to them. So as stupid as it might seem at first sight, it's not. It's actual reality that Unstoppable even made money or helped people save money who don't use Unstoppable. And I think I think people need to appreciate that. I think people need to continue supporting you guys, and I know I will.
Yeah. Well, thank you,
Yeah,
Andre.
Brady, dude, thanks for
And
having
yeah, I
me on
appreciate.
here. And dude, you guys are amazing. You guys are kicking ass, and I'm getting calls from other people and messages like, what's up with Unstoppable? Who are they? So just keep doing what you guys are doing. And for everyone on here, thanks for listening to us kind of ramble on about different topics. But we're all kind of, we all sell domains, and we're all in the industry, and we're all, obviously a little competition. But at the end of the day, there's so many ways to make money in domains that we don't really cross paths too often, and it's just a supportive thing to have someone to talk to. So my DMs are always open, and if you want to talk about anything, just shoot me a message, and I'll try to at least have a discussion or at least give my opinion. Or if
Renee is a talker, so get him talking, guys, and you will learn a lot. That's for sure. But yeah, Renee, great to have you up here. Andre, I appreciate the sobering counterpoints. I do think, mass layoffs probably the most likely contributor to a recessionary period, as a large chunk of the economy no longer has income to spend, and all of that gets soaked up by the hyperscalers. But yeah, well, important. I'm certainly wary of volatility and trying to stack a little nest egg in case things shit hits the fan for one reason or another. So we appreciate the sobering accountability there. Guys, it is $5.99.com Friday at Unstoppable. So head on over if you're not in the Domainer Club already. Like I mentioned, will expect our prices to increase again here in a month or so. So take advantage of any transfer discounts you can, and as well as our hand reg prices. Um, Things continue to ship at Unstoppable. Claude Code is making it way easier for us to put out new features. So you'll see name server filtering in your dashboard pretty soon, if not already. We've got dark mode out. We've got some improvements made to our landers, which look a little bit nicer. We've got back orders coming out next week. So we expect our back orders to be, roughly the same cost as our hand regs. And so that will be something you can take advantage of. Similar to SAB, if you guys use SAB back orders, not exactly competitive for competitive drops since we won't have many licenses, but it'll be at cost more or less. So no additional fee. You might as well throw in a Hail Mary back order for your wish list. So stay tuned for that. What else have we shipped? I've gotta think, but
oh, you guys, it's working
things.
live day 60 or day 61. It automatically sent email today on some names that I put in, so that's amazing. I didn't have to resubmit them to get them into the fast transfer. You guys did it automatically, which is sweet.
That's right. That's right. I know Renee. You guys can thank Renee for that suggestion. We tend to listen to you guys, so if you make enough noise about a feature that you like, I will listen and throw it into the roadmap. And I'm getting more indulgent by the day on wacky, fun, tiny features. So as as Claude Code makes it easier for us to pump out small features, we are willing to indulge them. So throw suggestions, no matter how small, my way, and we can take a look and try to get those in. Let me see what else we've put out recently. Um, let's see. We no longer required buy it now pricing for listings, so you can just have make offer or message seller options. So that's something new. Obviously, we've had the Identity Digital and .io price increases and changes recently. That's not ours. That's the registry there, but something to know about that. We've got better expired domains tracking inside your dashboard, so it should be easier to find domains that are expired. Oh, and of course, we have officially launched our mobile app. So go to the Play Store or the iOS App Store and search for Unstoppable Domains, and you can download our app, which is free, of course, and lets you get especially mobile notifications for important things like expiring domains or any messages you might get on your leads and domains. So that's great. Try that out. Let me know what you think. It's not as fully featured as using the website, but it should be a fairly nice experience for you. So give that a shot and let me know what you think. Improvements to our seller storefronts. So go into your settings and check that out. You can obviously share that link with your buyers, and they can search through and filter your domains and sort them to their heart's content. So that should make it a bit easier for you to sell your domains. And then, that's basically it. But more coming down the pipe every day. We'll soon have some expired auctions for you guys as well. So I know that'll be an interesting new aspect to our marketplace that you guys can tune into. So yeah, keep up to date, guys. We're moving fast and always open to feedback. So ping me if you have anything. On that, let's wrap and call it a day. We covered a lot of ground with Domain Shane today. So I hope you found it useful. Go get some hand rags this $5.99 Friday, and hope you get out there and have a good weekend. Touch some grass, and don't be so doom and gloom. Don't listen to Andre about this recession stuff. Go ahead and have some fun, and maybe touch some snow. I'll be skiing this weekend. I'm in Tahoe. I'm so excited. Being in Puerto Rico, I don't get to ski very often, so it's great to indulge myself when I'm out here. Anyways, guys, appreciated the rich conversation today, and we will catch you next time. Ciao.